Hey, what's going on everybody, and welcome back to another breakdown video. So I'm gonna give you guys the breakdown of the trade that we took this morning with gold inside the VIP group. This morning we took some buy position. We took this trade 5 minutes before the New York session. So we also had NFP. Well, supposedly you're gonna have NFP today, but since this week we did have the government shutdown, the NFP day was canceled, so there was no very crazy volatility this morning during that time session, well, the time that it usually supposed to happen, which is around 8:30. But we entered this trade at 8 a.m. We took some buy position with gold. We had two entries, so we had one which we enter market execution, and then the other one was set as a limit, which was going to be around the 38.60. Our stop loss was placed underneath these lows over here, which is going to be under the 38.53, which is going to be our invalidation zone. So if price action would have broken underneath these levels, then we were pretty much wrong with the analysis. We have the TP levels in the final TP, which was at 38.93, which was going to be somewhere above these highs over here, but we did manage to exit out this trade very early as soon as we did see that price action was rejecting off this exact zone, which was a very clean exit. So this is something I'm going to be talking about in this video, which is understanding when to exit the market or when to continue holding in the markets, right? So once price action came back towards these levels, if you guys look at the left side, we have areas of resistance, which every time it comes towards these levels, there is a type of seller opportunities, right? That's exactly what price action did. As soon as we tapped towards these zones, price action immediately rejected and pretty much dropped all the way down, which obviously if we were not secure profit from that point, we probably would have lost this trade, or not lost it, we probably would just got stopped out of break even, which we could have actually secured more profits here. That's exactly what we did. So we did have a very nice exit. We did manage to hit every single take profit, closing this trade out at 250 pips at a 1 to 2.7 risk to reward. So in this trade here in our account management, we did manage to close out $3,774 in profit, as you guys can see right there. That is the position that we took this morning, as you guys can see, a live account. And then this is the $3,300 that we made this morning. Beautiful day to close out the week. Yesterday we had an amazing trade as well. Just look exactly how price action just worked us out by a few pips. This trade here was annoying. The reason why it's just annoying is simply because it worked us out. The trade analysis, everything that we had was on point. Price action perfectly sold off. This would have been a beautiful 1 to 3 risk to reward. It dropped even lower, which would have been even a 1 to 6 risk to reward if we did manage to continue holding this trade. But obviously we cannot win them all. Unfortunately, we got wicked out, and then price action went to our direction. But this morning we secured our profit, recovered this loss from here, so there's no problem at all. And on top of that, this past couple days with gold, we've been winning back to back to back. As you guys can see, every single trade, you guys pretty much have seen the breakdown. So this was a trade that we took on Tuesday, a 1 to 3. Monday we also took another 1 to 3, and we also took some other trades around these levels over here. But that's pretty much what we took this morning. So let's get right into the breakdown. So first thing first, the trend with the markets, right? So obviously with gold, we all know that gold has been extremely bullish these past couple weeks, the past couple days, overall the entire year. We've been simply creating higher highs and higher lows, which obviously means that gold is still overall bullish, right? Now this entire setup did happen off the 4-hour time frame, so I was focusing more on the higher time frame, which was pretty much looking at the bigger picture, waiting for price action to pull back to specific areas so that we can simply react off every single trade that we take, right? So the setup that we took this morning is very similar to the setup that we took on Tuesday. If we start off from the beginning of the week, let's focus on this fair value gap right over here, which is the bullish fair value gap, right? This was the opening of this new week. The opening of this new week, what do we notice? We noticed that price action had a very strong imbalance push towards the upside. So this is pretty much called an impulse move, right? An impulse move is simply whenever price moves both ways. It can either go towards the upside without having a retracement, or it can also go towards the downside without having a retracement, right? So these are called impulse moves. This is pretty much a good example that I can give you guys will be a hype buyers or hype sellers, right? There's just a lot of volatility going into the market. So usually whenever price has impulse move towards the upside like that, there's always going to be specific zone, which is either a demand zone or a supply zone or fair value gap zones, where price action is pretty much, or another way to say is that there's still orders there that needs to be filled up. So a good way to explain it is, let's say that 60 or 80% of buyers started buying the market over here, leaving 20% orders still left over here that still has to get filled up, right? So we have the impulse move towards the upside. The retracement is pretty much to confirm this over here is going to be noticed as the discounted price. This is pretty much where price action comes back towards this specific area. Obviously you guys have to wait, which is the basic stuff, which is the rejection, right? It doesn't really necessarily mean that you have to buy right away. You always have to wait for this type of rejection to confirm that the trend is still valid, right? It works on both sides, the bullish trend, and also works on a bearish trend as well. In this case over here, this is exactly how the trend will look in the bearish market. This over here will be a bearish fair value gap, another zone, supply zone, where price action pulls back, filled up the rest of the orders and continue the trend, right? This happened at the beginning of the week. We had the impulse move towards the upside, we got the pullback towards this fair value gap. If we go on down pretty much to even lower time frame, you guys can see how price action rejects off these zones and start having the shift of structure, right? And that's exactly where we managed to benefit off this trade over here, which played out for a 1-to-3 risk to reward. So if we go back over here on the 4-hour time frame, we pretty much had a similar move that happened right over here. So check this out. This move right over here, let's just put this like this. This move right over here happened exactly right over here as well. All right, let's just make this a little bit more organized. We're gonna put in this color. So this entire move here, we're gonna make this in orange, pretty much happened right over here. So you guys can see how it had the impulse move, it had the pullback towards this fair value gap, and then had the rejection. If we look at it from this rejection over here, we had another impulse move towards the upside, another pullback towards these fair value gap right over here on the H4 time frame. So pretty much what it did, it cleared out liquidity towards the upside, pulled back towards this fair value gap, rejected off this fair value gap 2 times. You guys can see the first time over here, the second time, and the third time. And the third time is obviously when we started having the push towards the upside, which was the move that we caught this morning. So very similar context, or very similar pattern of the 4-hour time frame with the trade that we took on Tuesday. We had the impulse move, you had the pullback towards this fair value gap demand zone, price action rejected, it had another impulse move towards the upside, orders are being filled over here, and then we have leftover orders being filled over here that hasn't been filled up yet. So we had the impulse move towards the upside, the pullback towards this fair value gap from the 4-hour time frame, rejection towards these zones, and then start having the push towards the upside, right? So this is very important to really understand, and how to mark up, your fair value gaps, understand demand zone, due to the fact that if you guys go into an intraday time frame structure, right, you guys can notice how the pattern shifted over the time. So this is pretty much where there's a lot of fake outs, and a lot of traders can get pretty much confused thinking that the market is going to start having a shift to structure, right? So for example, over here we were simply creating higher highs and higher lows. We formed a new higher high, and then price action started breaking underneath all of this entire structure. A lot of traders probably would have been like, oh look, we have broken underneath these previous higher lows over here. So most likely price action is going to come back towards these areas, and we're going to start seeing some seller opportunities, right? That will be the logic right? Which is going to be working obviously 50% of the time. That's exactly how trading works, which is just pure of probabilities, right? So over here, let's say this was a break of structure. Price action probably could have gone towards the downside if it respected these levels, but we rejected off a higher time frame structure, right? So this is very important. A higher time frame structure is always going to be more valid compared to the ones that are the lower time frame, right? So again, whatever happens in the higher time frame, it's always stronger than the lower time frame. So going back over here on the 1-hour time frame, pretty much we had the rejection, and then this is exactly where a lot of sellers probably would have gotten stopped out, thinking this over here was all just selling opportunities, right? Price action starts breaking structure, and we start pushing towards the upside. Another thing that happens over here, we have another impulse move towards the upside. We did have the basic logic, which is the break of structure, but yesterday, notice how price action came back towards this exact sell zone, which was the highest on the all-time highs, which is going to be set around the 38.93. We had the first seller opportunity, price action pushed back towards the upside, respected all of these entire structure levels over here, that buyers were still in control, but overall sellers were still holding around these levels over here, which this over here was just simply clearing out liquidity. And again, this all happened during the late London session. This was during the London session going into the New York session. So pretty much we had the break of structure, we had the retracement, buyers maintain itself above it, which is simply going along with the trend. But then we have a liquidity sweep, pretty much sweeping above all of these entire resistance over here, where price action starts rejecting this over here, showing us that sellers were in control of the markets, start having another push towards the downside. Now notice over here, what do we notice of the intraday time frame structure? The intraday time frame structure, we have another break of structure. So again, we have another break of structure off the 1-hour time frame, which is the intraday time frame levels, right? But if we go back here on the 4-hour time frame, what do we notice? We notice that price action is simply having a sweep or pullback towards these fair value gap off the 4-hour time frame. So since price action had a pull sweep towards these levels over here, notice how this wick candles over here. Notice this wick. You see this wick right over here rejecting off the fair value gap. That is already pretty much showing us that there's a lot of buyers holding this position over here. So this sweep over here and closing above these 4-hour fair value gap already showing us that buyers are in control. So we go back here on the intraday time frame. Yes, this makes sense because again, we had resistance, price action broke underneath. These are pretty much double top. These are equal highs. We broke underneath this entire structure. Obviously, the way to trade this pattern is that if price breaks underneath these higher lows, we're simply pulling back and creating that lower high, which is exactly what price action did. We pulled back, created that lower high, respected all of this entire structure. But remember what I said earlier in this video. Whatever happens on a higher time frame is always going to be stronger and valid than whatever happens on a lower time frame. So that's pretty much exactly what happened on the 4-hour time frame, right? We obviously had that pullback towards these 4-hour fair value gap right over here, which buyers started taking control right away. Same thing happened over here. We had the pullback, the break of structure underneath these levels over here, but we still respected and bounced off a 4-hour time frame structure. So if last night or today, if we were going to be looking for sales opportunity, right, the only way that we will always take sell opportunity will always be with the confirmation. The confirmation for us to execute this setup over here and trading this pattern is simply waiting for an intraday's time frame break of structure, switch the trend, and the pullback retest of these levels. So again, we had the rejection towards these highs over here. We have high, resistance, resistance, sell off, break of structure, higher low, created a new low over here. But this low respected these 4-hour time frame fair value gap, which is also known as another demand zone. So notice we have buyer opportunities, buyers stepped into this market, created a new higher low. We have another push towards the upside. Now we form an intraday time frame lower high. So we have a lower high here and another high over here. All right, so this is being respected. Now this is exactly two confirmations why we don't take sells right away. The first confirmation, once we rejected these entire structures over here, what did we notice? We noticed that impulse push towards the downside. Yes, we did see some type of seller opportunities, but again, this is no longer giving us a high probability setup. So let's say that we would enter off this breakout. Our stop loss was going to be underneath these lows over here. Our take profit somewhere between these, our take profit somewhere between these lows over here. Notice how price action would have simply just bounced off once again towards these fair value gaps. So there is no good probability in this setup. The setup over here would have simply been a break even. It probably would have not even hit a 101. Yeah, like it would have been over 100 pips, which would have been TP4, not even a 101, and would have stopped inside of break even. So it's going to be pretty much a waste of trade. So it's not really something that we want to be taking. We want to be taking a trade that aligns with our pattern. So the only way that I would have taken this sell would have been one, we respected this lower time frame break of structure right over here. That will be the only way that I will be taking these setups, right? So again, we had the rejection towards these highs over here. We have the break of structure, price action pulls back towards this break of structure, creates a new lower high. We have the push, but now what do we form here? If we go back towards my notes, let's go back towards my notes. Towards my notes over here, we have the confirmation, which was the 1-hour rejection of the golden zone, the Fibonacci level, right, which confirmed the higher lows, also showing us that buyers are still in control of the markets, right? So again, if we go back here on the H1 time frame, we're gonna grab our Fibonacci level, which is basic stuff. We're gonna grab it from point A, which is gonna be these lows over here, to point B, which is gonna be these highs right above here. Notice that retracement. We have the push and we have the pullback. The pullback, or so let's go back over here. We have the first pullback towards the H4 time frame fair value gap. So again, pull back into this H4 fair value gap over here. We have the rejection 2 times off the fair value gap. So we have the push, we have the first rejection, the second rejection, the third, and we also have the last one, which was the fourth one, which is the confirmation. H1 rejection of the golden zone, the fib level, right? It confirmed the higher lows, as well showing us that buyers are still in control. So we have the pullback, formed a new higher low. So what do we have over here? We have low points. We have a low point over here. And now over here, we also have, or let me just delete all of this so it does not look messy. And then right over here, we have a higher low. You see this right over here? Boom, a higher low. So that's going to be another confirmation on why the sell opportunity was not valid. Simply because we respected that golden zone and we respected the structure. Low, high, higher low. Simple. We already noticed that the intraday time frame is already having the possibility of having the switch of structure. Now, how can we confirm that the trend over here is now 100% confirmed? Just because we had these 2 bounces over here doesn't necessarily mean that it's 100% confirmed. There can be time that price action can just come back, reject it, and then boom, sell off. There's going to be time that price action can do that. Now, the thing that confirmed our trade this morning was the last one, which was the structure, the intraday resistant break of structure, which is going to be the 3862. These zones over here, the 3860, 3862, 3863. Again, if you guys look towards the left side, we had areas where buyers stepped into the market previously. So this over here, all of this entire here are demand zones. So we have buyers, Then price action broke underneath. We had sellers. These sellers over here turn into buyers once price action has broken above these levels. Now, once we form this H1, once we form these H1 higher lows right over here, what else do we notice? Notice this pattern right over here, this gray box. Let's put this blue so you guys can see a little bit better. What do we have in this blue box right over here? We have another fair value gap. So we have another fair value gap which price action broke above it. We also have the pullback on a lower time frame. So we go here towards a 15-minute time frame structure. We have the break towards this fair value gap, the break structure of these levels over here, which was one's area of support, which broke underneath, and then price action pretty much had a correction. So another way to say this pattern over here, we can say that all of this over here was an accumulation. We had the manipulation towards the downside, and then we also started having the distribution. The first confirmation of this distribution over here was simply the break of structure above these highs over here. These lows over here, which was the H1 fair value gap, which price action pulled back, rejected. We also have the rejection towards the VWAP. So you guys can pretty much see how everything aligns, right? It really as well, it aligns whenever you guys are looking for selling opportunities. It's just simply liquidity sweep, pretty much sweeping off levels over here and just repeating the structure over and over again. So we're looking at it from a sell side. We have the lower high. We have, let's say, the high point over here, a low point over here, and a lower high. Then price action goes back towards these levels of resistance, and then we start seeing the pullback towards this level. We have the fair value gap over here, which price action just simply rejecting off, as well with this entire VWAP over here. The only confirmation over here will be simply a switch of structure, which will simply break underneath these lows over here, which will now form a new lower low, and then lower high, and then just continue with the trend. Now, in our case, since we're looking for buy position, price action broke above this, pulled back into its fair value gap, rejected it, and then we started forming these London lows. These London lows are going to be set around the 38.57 all the way to the 38.63 zone. We had the first push, the second retest, and then we have the third retest, which was during the New York session open. So we already saw that these three lows over here has been respecting back to back. So this is showing us that buyers are controlling. They're still showing us that there's a lot of buy orders being placed in these levels. Buyers are defending these entire support zone. We're also defending this entire VWAP levels over here. So usually whenever the VWAP is trading underneath these candles over here, is holding at support, showing us that there's a lot of buyer opportunities. Whenever the VWAP is trading above the candles, it's showing us that there's selling opportunities, right? So for example, these are buyers. Over here we have a little bit sellers. But overall, since the trend is still bullish, we are obviously going to see buyers. Another good example will be right over here. You see this above it, there's sellers. But going back over here, we have these entire London lows, which price action just simply started bouncing back to back to back. Now my entry was simply a 5-minute bullish engulfing candle. So once we had the pullback towards this level, the rejection towards this entire support, the rejection towards the VWAP, notice the first bullish engulfing candle closure, which is going to be these right over here. This over here was the first confirmation showing us that buyers are in control. Now, the reason why I did not enter the market over here was simply because if we go back towards the H1 or the 1 minute time frame, the 1 minute time frame, always in my entry confirmation, I'm waiting for a break of structure, which will really confirm the setup for me. So in this case, since we had the bullish engulfing candle, all I was waiting for was for the break of structure, which in this case is going to be above these highs over here. So we went from higher highs, higher lows to lower lows, lower highs, lower low, and then high, and then a higher low. Very simple market structure. Once we started holding above these levels over here, all I waited for was for a bullish engulfing candle closure above a 5-minute time frame structure, which in this case is going to be this candle right over here. So this bullish engulfing candle was my entry confirmation, my entry signal. So once we respected the 1 minute time frame structure, price action maintained itself above it, and we closed above the areas of interest. Right there is exactly where I entered the market. My stop loss was underneath these entire 15-minute lows session right over here, which is going to be in the entire support zone. If price session would have broken underneath this level, then it shows us that our buy position was invalid. So it's very simple. So this is pretty much the setup that we took this morning. Our target was going to be set at a 1-in-3 risk to reward, but since I told you guys that price session was coming back towards these levels, it is very important to understand exactly when to exit the market, and that is one of the mistakes that a lot of traders makes. They pretty much have greed, they have the FOMO, thinking that they're going to miss out a profit, they want to make more money, right? No, you need to understand exactly where to exit the market. The market is going to be timed that the market can play out your full take profits, or there's going to be times where price action can have signals showing us that there was already previous activities going on around these levels, which means it's better to secure your profit than be selfish or greedy. Let's say that I did not secure profit over here, price action immediately rejected. I could have gotten stopped out of break even, not make a lot of money the way that I made this morning. If I did not do this, that's pretty much selfish. It's pretty much greed. I'm not, pretty much trading. I'm trading now. I'm pretty much just gambling, not just trading. Just pretty much just going what I want to do. So that's exactly why I exit off this market. It was very simple, very clear. If you guys look towards the left side, there's a lot of selling opportunities. So why not take profit from there? There's no point to be greedy. Now, the only way to confirm more of these buyers over here at this point over here, all I would simply wait for was for be a break and retest above the structure and start building up on bullish foundation. So very, very simple trade that we took this morning. Very great way to close out the week. I hope you guys enjoyed this breakdown. I hope you guys enjoy every signal that was sent out this week for free inside our Telegram. I'll see you guys on the next one.